Says it's a quality company, but the shares are still overvalued. We're joined by Mike Vinokur, portfolio manager at MV Wealth Partners with IA Private Wealth. Great to see you.
Great to be here.
So it's a case of a good company, but not a great stock right now.
Yeah, well, we're value managers, right? We're not looking necessarily for something that's trading at a very high multiple just because, the growth keeps going. We want to look at something that says to us, well, there's a big margin of safety in terms of valuation, because if for whatever the reason is, the growth engine stops or even decreases, how's the market going to react? So fabulous company, great platform, great enabler of small and medium-sized businesses for e-commerce and such, but not our cup of tea.
Trading, according to my Bloomberg screen, at about 70 times this year's earnings.
Something like that. I mean, again, it's a very big grower, and so maybe they'll grow into the valuation, but it's not there for us just yet.
Gosh, it's a big company. 121 billion market cap, Canadian dollars.
Yeah, no, it's not small. And I mean, what a success story. You have to hand it to Mr. Finkelstein, and I believe it's Mr. Lutke. What an enterprise they've built to help Canadians and, in fact, people all over, build their businesses. But when you look at equity investing, we like for our equities to fit into a certain box and check mark a few of our parameters, and this one just doesn't yet.
Corus Entertainment, CJR.B, of course, would compete with us, CTV. It runs Global TV, among other assets. It seems that there are solvency concerns now.
Yeah, you could tell by the stock price, by the balance sheet, by the recent layoffs. I'm not sure that this is a going concern. Certainly, they have some very good properties, absolutely. But I think that at this point in time, you're going to need a restructuring of some sort. And I don't know what the value of the shares to current shareholders is going to be, if anything, above zero. Perhaps maybe they can, do a Chapter 11 or whatever, a bankruptcy restructuring, reduce debt, reduce liabilities, recapitalize the company, come out the other side. But I'm not sure what the current shareholders are going to get out of that, if anything.
Strictly for speculators right now, the stock?
Probably.
Okay. Gold actually, it looks like we have got a new record high for gold today. We're likely for the most active future to get a record high close. Are you heavy on gold these days?
We're not heavy on gold. We do have a small gold position through ETFs.
Okay.
Gold is a funny asset. Some people believe it's, a replacement for money. Other people believe that it's a reserve, currency. Other people just trade it like a commodity. No. It does have some properties of inverse correlation to other classes. And, for so many years, gold has done nothing, and now it's breaking out. So from a charting perspective, you have to respect the breakout.
Right, but it's not a big part of your portfolio.
Not a big part, but it is a small piece to have as a token hedge, if you will.
What about U.S. bank earnings? Are you seeing a pattern there?
Yeah. We think that people are underestimating the U.S. banking system. This is not the banking system of pre-2008, where you had 30, 35 times leverage. These banks, I think, are rock solid, especially the bigger money center banks. I'm talking your Wells Fargo, Citigroup, Bank of America, JP Morgan Chase. These are stalwarts, and they've worked so hard to make their balance sheets, dare I say, almost bulletproof. That even, June the 28th, I believe the most recent Fed stress test came out. And they were putting in some extremely onerous scenarios. And even in an extremely onerous scenario, none of the banks would need a recapitalization. So that speaks to some big heft in terms of profit margins, capital levels, diversification of their businesses. And if you look at the amount of reserves that the U.S. banking system or the U.S. financial system has sitting at the Fed, it's monstrous. So we think that even if we did have a more than your garden variety slowdown, the U.S. banking stocks are going to make it through, and we think some of them could be extremely cheap right now still. Our favorite is Citigroup. We were pounding the table at 40, pounding the table at 50. Here we are at 65. It's still trading below its book value. It's still trading well below its tangible book value. They just increased their dividend. We're waiting for buybacks to occur. We think that there's going to be a lot of accretion. Had a lot of respect for Jane Fraser and the overhaul and the revamp that she's had on this very big organization. We also own State Street. That was a top pick of ours just a week ago on Market Call. They reported this morning. We think it was fabulous. We like what they were saying. They've got great capital levels. They have a dividend bump, which is always nice. So yeah, and we are looking at Bank of America, though we haven't bought yet. Still doing our work on it. Still trying to see where we think the rubber meets the road in terms of valuation and upside.